The supercharger network is, in my opinion, Tesla's ace in the hole or ace in the PowerPoint. Elon made a really wise decision by investing in that. He's starting to open up that supercharger network to other businesses and vehicles, and we're witnessing all the other corner companies switch to the plug type he has in there. If he gains dominance in the infrastructure and power supply sector, he might wind up with a quite interesting subscription model. It's still the second or third inning of the story being told, back against the wall. Not that this is going to be rose and champagne, but we've seen it happen before, and you're going to be talking about approaching the point when 34 million cars are produced annually. And Kathy is probably right. Renowned analyst Dan Ives has boldly declared what he believes will be the eventual valuation of Tesla. Come along as we dissect his audacious prediction and investigate the elements that could propel Tesla's possible meteoric ascent in the upcoming years. Although Tesla's stock has considerable influence over some market segments, is the current decline in value justified? Are there going to be more drops? Analysts continue to suggest the stock with equal weight in spite of the risk. Keep checking back to find out more about the potential implications for investors and the state of the electric vehicle market overall. Please first like this video and subscribe to Tesla Stock News in order to help us sustain our channel. Welcome to Tesla Stock News. Now let's get going. Is Tesla currently the best electric car manufacturer, especially in light of the current downturn in the industry? Although analysts acknowledge Tesla's current supremacy, they also point out persistent issues, like slower deliveries and regulatory obstacles, that affect the EV market as a whole. Though there are worries, there remains hope for Tesla's future. Dan and other analysts predict that there will be more growth and that the company may eventually generate millions of cars a year. But issues like range anxiety and EV charging infrastructure still exist, which affects how quickly consumers adopt new products. It's interesting to note that Tesla has expanded the market in unanticipated ways by drawing customers away from traditional auto brands in addition to undercutting rivals on pricing. This implies that while pricing is important, product availability and brand appeal are equally important factors that influence the adoption of EVs. Let's change our focus and discuss the larger EV market. Due to a slower than anticipated start and updated automaker plans, analysts have reduced their sales projections. Notwithstanding these obstacles, it is anticipated that EV sales will increase gradually over the next few years due to the introduction of new products. With an anticipated 50% market share this year, Tesla is still the dominating player in this industry. However, rivals like General Motors are advancing with breakthroughs like the platform that position them to take a double-digit market share. But what's impeding the broader adoption of EVs? Price is undoubtedly a factor, but it's not the only one. It's also necessary to address customer behavior and infrastructure. But with more advancements in technology and market growth, electric car prospects appear bright. An additional investor stated that they had made some changes to our estimates. Yes, altogether, we still make up a small portion of the market, roughly 10% to be exact, but we do expect that Tesla will continue to lead the market. Our projection for market share this year is slightly less than 50%. We believe that this year, in addition to Cybertruck scaling, a new product, such as the refresh on the Model 3, will be crucial for them. When you look at some of the third-party data about Conquest, who are they actually taking share from, you'll see that there's a fair amount more than what people might typically believe about Conquest coming from mass-market brands. That's what makes EVs so successful. They've accomplished some pretty incredible things in terms of market expansion and conquesting from segments that are even lower in price but broadly toward. This is one of the many impressive things that Tesla has accomplished in the last few years. Indeed, prices must decrease gradually in order to boost adoption, but as far as we can tell, 9.5% this year may still be achieved with a slight price premium over the market as a whole. EV sales are expected to develop steadily this year, despite obstacles, with penetration expected to reach roughly 9.5% and rise to 15% by 2025. However, we had to modestly reduce our numbers due to delayed beginnings and updated plans from automakers. And who do you think will be this year's key players in the EV market? According to Dan, Tesla is still the frontrunner and is predicted to hold on to almost half of the market. With its platform, General Motors is likewise making great progress and is well positioned to take a sizable portion of the market. However, the market needs better infrastructure and a wider range of product offerings in order to drive adoption even further. So, what do you think is the largest obstacle to the adoption of EVs? While price is a consideration, there are other difficulties as well. It's also necessary to address customer behavior and infrastructure. Nonetheless, the future of electric vehicles is bright given current improvements in the industry and technological advancements. As I mentioned, investors are still interested in Tesla even though there is more competition. Who else is as optimistic about pro-Tesla as you are? Our pals from Seeking Alpha. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for all things Tesla, including the most recent information on Elon Musk, stock price targets, innovation, and Tesla for fans of the company and those with a keen eye for the next gem in the stock market. The greatest pro-Tesla news source online is Seeking Alpha. Get to the facts without listening to the lamestream media's anti-Tesla propaganda. To take advantage of a special discount, click the link in the description. Thanks to its vision and cutting-edge technologies, Tesla has had an unmistakable impact on the automotive and energy industries. We'll look at how Tesla is improving their revenue game in today's video and what it means for you as a Tesla investment. Additionally, Ford EV customers now have access to the Tesla supercharger network with the use of an adapter, which is excellent news. When Elon Musk and Jim Farley announced their partnership on Twitter a year ago, people were shocked. The result of that collaboration is already seen as Ford EV users may now make use of Tesla's network of superchargers. The adapter, which connects Ford EVs to Tesla chargers with ease and streamlines the charging process, was painstakingly designed by Tesla. Ford has a competitive advantage as the first carmaker to use the Tesla charging network thanks to this partnership. This is a benefit that will surely be appealing to customers who want access to dependable charging infrastructure without having to buy a Tesla car. Tesla's well-established infrastructure guarantees a consistent charging experience for all vehicles, allaying worries about charging times. Due to its well-established reputation and brand awareness, Tesla is still the market leader for EVs. A sizable percentage of Tesla's sales come from word-of-mouth recommendations, which emphasizes the company's devoted following and community-focused philosophy. A major change in the business is indicated by Tesla's recent decision to let non-Tesla automakers to use its supercharger network. In addition to helping other manufacturers, this action presents a problem for charging businesses who only use proprietary standards. A significant development in the U.S. EV charging market is the incorporation of Tesla's North American charging standard into charging devices. With Tesla's charging connector, the North American charging standard is the gold standard, gaining popularity and becoming the most reliable, with over 20 billion EV charging miles. In terms of size and power, Tesla's connector surpasses rivals such as the CCS connector, providing both AC and up to 1 megawatt DC charging in a stylish, small design. What distinguishes Tesla from other manufacturers is its early recognition of problems and prompt resolution of them. Tesla made an investment to create a vast supercharging network after seeing the possible obstacle presented by insufficient charging infrastructure. This network has been essential in reducing range anxiety and encouraging the use of EVs. When one looks at Tesla's performance in the market, one can see that it is in a prominent position. Of the 12 Tesla models available in the U.S., 7 are eligible for tax credits since they satisfy IRS sourcing requirements. This emphasizes how dominant Tesla is in the U.S. market, where most EV sales satisfy tax credit requirements. Beyond Tesla, General Motors is an extremely strong competitor. General Motors is well positioned to secure a significant portion of the market by utilizing strategic alliances and regional supply chains to support its electric vehicle (EV) projects. Nonetheless, Tesla has a competitive advantage thanks to its established alliances and wealth of battery production knowledge. In response to worries over EV demand, it is evident that the dynamics of the industry have changed. In the past, when demand spiked, supply became constrained and prices skyrocketed. However, subsequent modifications have brought prices down to more reasonable levels. However, this has lowered the value of EVs when they are sold, making it more difficult to calculate the entire cost of ownership. EV adoption has advanced significantly in China and Europe, but the US market has its own set of difficulties, especially given consumer preferences that are shifting toward larger cars. From the Model S to the Model Y, Tesla's wide range of products demonstrates the company's dedication to both performance and innovation. According to analyst forecasts and its strong brand image, Tesla's efforts to expand its charging network to include additional automakers might result in up to $5 billion in annual revenue in the next 10 years. Jonathan McNeil, a former Tesla executive, compared this development to Tesla's AWS moment, emphasizing how an expensive burden was turned into a lucrative endeavor. Industry analysts like Dan Ives are also optimistic about the future, especially with relation to the electric vehicle (EV) business. Strong demand for its electric vehicles and a large fleet gathering useful data present enormous opportunities for Tesla, a global leader in the electric car industry with a sizable market share. Tesla is moving closer to complete autonomy, which might completely transform transportation. But there are obstacles ahead, especially in the supply chain. Senator Joe Manchin's opposition to tax credits for electric vehicles highlights how complicated the situation is. Given China's dominance in this market, the IRS requirements for battery component assembly and raw material procurement in North America provide substantial obstacles. The instability of raw material prices, particularly those of lithium, adds another layer of complexity and may jeopardize the sustainability of supply chain initiatives in North America. While it would be possible to meet the standards for battery component assembly, acquiring raw materials is more difficult. It takes more than just flicking a switch to increase Tesla's manufacturing capacity. It's a procedure that takes resources and time. Although there is a growing market for Tesla's battery goods among both internal and external consumers, increasing production capacity requires careful planning and implementation. Tesla's patented battery packs continue to power its electric cars despite these obstacles, offering better efficiency and performance. Furthermore, Tesla offers a range of battery products to suit different types of customers, such as Powerwall, Powerpack, and Megapack. Strategic advantages in the future include Tesla's supercharger network and the upcoming Cybertruck. Although the market impact of the Cybertruck is still unknown, Tesla is positioned as a major player in EV infrastructure thanks to its investment in its network of superchargers. As other automakers use Tesla's network and plug type, Tesla may be able to develop a profitable subscription business that would increase its sources of income. Tesla's competitive endurance is highlighted by its price strategy, which aims to preserve profitability while acquiring market share. Tesla continues to be flexible in its response to market conditions, even in the face of margin pressure from lower average selling prices. Tesla's ability to maintain innovation and overcome market obstacles will be crucial in evaluating its future prospects. Market will be determined by its entry into new markets. Ongoing are several chances and challenges for Tesla as it enters the electric vehicle industry. Tesla keeps recipe. Do you believe that other